Real Estate Investing Trust, or REIT. What is it and how can you use it? That is what we will discuss today on Nordic Finance. But before that, greetings my fellow investors and welcome. Here we help you realize, or at least we try to realize, your financial goals. In today's video, as said, we're going to discuss REITs. My name is Lucas.
And I'm Markus, and before we get into the video, let me ask you this. Have you invested in the subscribe button and deposited a like yet?
Do it. Before we get into the nitty-gritty here, I want to make a quick disclaimer that today's video is going to be very heavily inspired or stolen, whatever word you want to use, from Investopedia, because these terms are quite technical, so we wanted to make sure that we get it correct, just so you know. What is a real estate investment trust, or REIT? A real estate investment trust, REIT, is a company that owns, operates, or finances income-generating real estate, modeled after mutual funds. REITs pool the capital of numerous investors. This makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any properties themselves. Think, hey, I want to buy an apartment and get some rental income, but I can't afford it myself. I get 5 buddies, we all pool our money together, now we can buy the apartment. That's the idea.
Yeah, that's exactly the idea. If you just take it and make it into an entire company where tons of people are instead pooling their money into this REIT, which is a company which operates through either investing into real estate and managing these kinds of real estate properties, or that they even finance through mortgages or do a bit of both. So what is really good with a REIT, and what I got very interested in these REIT companies, is that they generate steady income for the investors, but they generally offer quite little in capital appreciation, meaning that generally, unlike stocks, REITs don't tend to just go up, so to speak. They might increase slowly over time, but you never pretty much have REITs that out of nowhere rise with like 10-20% or something like that, because they just collect this year by year income, month to month income, and it's generally tend to be quite the same. So it might increase a little over time because they get better properties, they increase their margins or something like that, but you won't see the kind of growth like capital appreciation that you would on a tech startup that goes from 0 to 100 like very quickly. Instead, the whole point of REITs is that you get some cash each month or each year, depending on how the REIT is set up, like generally a dividend income, and that you expose yourself to the real estate segment of the economy, even though you might not have the money to actually buy apartments, so to speak. And the good thing with REITs is that they are, a lot of the times at least, they are publicly traded like stocks, and they are deemed to be quite liquid because of this, because a lot of people, they are deemed to be quite safe. So generally people tend to hold maybe a few REITs. I do myself, for instance, and I think it's a great choice to maybe have a bit of your money into a few REITs. Anyways, REITs generally invest in most property types, so this doesn't only include apartments, even though we said that. It's quite common also that they are specific REITs for specific segments. Personally, for instance, I only have specified REITs. I have one REIT which only invest in US industrial properties, so properties that are meant to operate as maybe factories or producing facilities. And I have another one that specifically invests into medical facilities, so more like hospitals and stuff like that. So in this sense, REITs are similar to ETFs or hedge or index funds, where you can select segments which you actually want to pick to invest your money into.
Okay, so what actually qualifies as a REIT? Most REITs have a straightforward business model, as we've already discussed. The REIT leases space and collects rents on the properties. Then it goes on and distributes that income as dividends to shareholders. These are things that we have already mentioned, but repetition is king. Mortgage REITs don't own real estate but finance real estate instead. These REITs earn income from the interest on their investments. To qualify as a REIT, a company must comply with certain provisions in the Internal Revenue Code, IRC. These requirements include to primarily own income-generating real estate for the long term and distribute income to shareholders. Specifically, a company must meet the following requirements to qualify as a REIT, and I assume this is going to be for the United States.
Yes, the US. Correct.
Yeah. So, invest at least 75% of total assets in real estate, cash, or US treasuries. Derive at least 75% of gross income from rents, interest, or mortgages. Please help me.
Mortgages.
Mortgages that finance real property or real estate sales. Pay a minimum of 90% of taxable income in the form of shareholder dividends each year. Wow, I didn't know it was that much, because I've still heard of REITs that are quite aggressive, that they still grow.
Surprising that REITs can actually grow quite a bit, even though they pay out a lot in dividends, because they're obligated by law to pay out a lot in dividends. They could obviously choose segments and operate very well so that the investor tends to favor them, as they are deemed to be quite safe and a safe way to get dividends over time, which I think a lot of investors like. We're gonna briefly go over the pros and the cons of these REITs, and there's definitely a lot of pros. Like I said, I have, for transparency, also I have REITs of my own. So what I like about them, and what we also found on Investopedia and through other sources, is that they're a great pros in the sense that there's a lot of liquidity in REITs. They generally tend to be, it's easy to convert them into cash if you need to, and they generally don't at least tend to go down quite a lot, so that there are times where it's not a good idea to sell REITs. This might be a problem, say that you have a stock, for instance, that goes up and down a lot. Sometimes it's very hard to get an appropriate price for it because there's simply not enough buyer and the stock keeps going lower. This is generally not the biggest case for REITs because they don't tend to go up a lot, but they don't tend to go down a lot. So that way it's quite good to invest in REITs if you might need to take out your money at some point. Also, of course, there's a great pro in the sense that they are generally quite diversified. Now, there might be a risk that you would invest into a whole segment, say that you would, I know that a lot of people are maybe concerned for the retail side of REITs, especially now during the corona pandemic. It has been quite hard hit. So a lot of retail sales or retail focused REITs have been quite hard hit by the corona pandemic. And there is, of course, market risks, which there always is. But generally REITs tend to be quite diversified because they don't operate just one real estate property and that's it. They tend to have a lot of different ones. They might even be diversified into different countries and different segments, so they are generally quite diversified. Then of course you get stable cash flow through these dividends. So if dividends is something that you are interested in, I definitely think you should check out REITs. They are one of the most maybe classical ways to acquire dividends, and quite generally they tend to be quite high, these dividends also, at least compared to companies. And a lot of, at least according to Investopedia, it has an attractive risk-adjusted returns. And I do agree with this actually. If you're considering the risk with REITs, which tend to be quite low, then it's definitely might be a good idea if you are interested in the dividends. However, when you then go to the cons, of course, what you're sacrificing, so to speak, is that REITs don't tend to increase a lot like over a short period of time. So this is not something, if you are a short-time trader, I don't think you should look much into REITs, because they don't tend to go up a lot over a limited amount of time. They generally tend to go up slowly. But so if growth is something you're looking for, this might not be the play for you. Of course, there are also some tax disadvantages through investing through REITs, because they are taxed as regular income, at least in the US.
Wait, whoa, hold up. Regular as like working income?
So Lucas, I checked this in post, and at least in Finland we do not add the taxes on REITs to our income. Instead, what happens is that it is taxed like regular old capital gains tax at 30%. For most REITs, that's at least the answer I got from Vero when I asked. So you pay 30% on all the received dividends from REITs, as they are not classified as dividends per se. They have a special section in the tax law in Finland at least, where they are taxed as capital gains and not dividend. Then there is also a potential for high management and transaction fees, and this actually makes sense because, like we just mentioned, 90% of the taxable amount of the REIT actually goes back to shareholders. So the actual managers and the management of this REIT is not all that incentivized always to not take out, for instance, high salaries or pay out things that might not make sense from a shareholder point of view, because it's mostly the shareholders that is receiving this kind of money. So there might be some agent risk. Of course, if you find a good REIT that is well managed, this is not a problem, but there could be these kinds of problems in, should we say, poorly managed REITs, that there is some shady stuff going on, so to speak.
Now, what we're going to do is Markus is actually going to show you how you can invest in your first REIT, but that's going to be in the next video that we're going to do, and that we're going to link to this one. So you'll see that probably in the description as well as an info card when you're watching this one. So please, if you liked what you heard here and you want to set up a similar system for yourself, that's the video to check out next. And with that is everything we have on REITs, and I want to thank you so much for watching to this part, to the end if you have. And as always, I want to wish you guys happy investing.
Happy investing, guys. And remember to pool those money. Apes together strong.
Apes together.